Well, hello and welcome to today's free trading video and market analysis. I'm Kenny, your host, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. These are our proprietary indicators suggesting our intraday dynamics of where the market's likely to head. And as you can see right now, we're looking at the E-mini S&P 500 futures contract with the last print of 896. These are indicators. This is our primary indicator, secondary indicator. We'll just call these both tertiary as they are equivalent to a large extent, although this one might have a slight edge. Nevertheless, what are we looking at here? Well, we had a gap open higher on this Thursday of the holiday shortened week. Had a gap open higher, just came down, a simple gap fill, but as you can notice, we've had an awful lot of red bars lately. These suggest really where the market's likely to head. Red means sell, green means buy, and yellow means neutrality. But the first thing we notice is there is a nice little positive divergence amongst our primary indicator on the market. However, having said that, given the gap higher on the open, definitely expected a gap fill, got it plus some. But what did that tell us? Did that tell us that the break of yesterday's low, late session low, along with yesterday's close was likely to stick? Well, actually, the divergence told us, along with this bullishness, that we're likely to get a snapback, and that's exactly what we got. So it's been a beautiful trading environment so far today. Unfortunately, that's from a discretionary basis, but unfortunately for our systems, it wouldn't. Actually, a lot of our day traders really haven't even traded. We'll look at that in a second. Got a lot to cover, running low on time. But a lot of our day traders haven't traded today. That's actually fortunate given that taking advantage of the short side, but boom, right back. All your profits would be eroded. In fact, our black portfolio was up about $5,000 at this point. Came back to around the break-even level up $1,000 right around here. Just really wanted to retest the highs of the early session. That's what we've done. Actually, a buying opportunity with the retest of the trend, but given the overall trend is to the downside after yesterday's strong move, amidst this choppy market, this is obviously neutral to slightly bullish. This is bullish. These are bearish. Really just a choppy environment, but definitely a good trading environment. If we scroll out, we can look and see exactly what's going on. Here we had full bullish, 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 bullish. We had a break above the trend. So this gap fill actually eventually went on to not only fill the gap, but definitely the bulls took over, closed near the high of this day, high of the session. Definitely was an impressive day on Tuesday to start the holiday shortened week, and as you can see, full bullishness there. And then we got the divergence. As you can see, boom, just fell off the cliff. Bears are definitely in control, definitely wanted to be selling any kind of strength. 910 level, the high of the prior day, was the key level. Very choppy was the early session on Wednesday, and we eventually got the break in the trend. A lot of red bars, as you can see right there. A lot of red bars, as you can see right there. A little bit of green, but mostly red. And then we got the break of the trend. Very nice move to the downside, following the day prior's move to the upside. So as you can see, our intraday dynamics overall definitely suggested a bearish cause here. We did have this one, but 3 out of 4 ain't bad. Definitely got to move to the downside. So that's enough of the intraday analysis. Like I said, we have a lot to cover here. As you can see, right now we're breaking back below this trend. We do have bullishness here. But overall neutrality here, bearishness there, bearish emerging there. Just definitely a choppy environment. Actually, looking at our ES Day Trader 1.0, catching a beautiful winner. Look at that. Buying right near the low. This was Tuesday, right near the low. Selling near the high, 910. A nice 25-point gain in the ES Day Trader 1.0. Russell Day Trader 1.0, unfortunately, just getting whipped out of this short setup. Very whippy environment. Had an errant move right there, as you can see. But look at this beautiful winner yesterday, 500 down to 490 for a nice $1,000 a contract. Black trades for contracts, so we'll go ahead and just minimize that. Taking a look at the master right there, and we'll look at the cash market. So where do we stand? Just trailing along, consolidating. We do still remain 100% bullish for our intents and purposes. As mentioned, we definitely need to get back above 950 in the S&P 500 cash. Essentially, we need to get back above this high, 930.17. but definitely a strong bearish divergence right there. And short-term bearish we remained in terms of momentum. General neutrality, actually. Arguably short-term bullish. Intermediate term, this should read neutral. Sorry about that. Intermediate term neutrality, but definitely overall we remain comfortably bullish. Not much has gone on in terms of price from a trend following perspective. The short term is just simply correcting this move. We just need a little bit of time to correct this and consolidate this move for another leg higher. Should we get below 850, obviously we'd have to rethink the bullish scenario. Actually went bullish around 800. So currently sitting on about 100 points in discretionary profit on the OAX. So where have our portfolios been? Where have you saw a couple of trades right there? Here's just want to show you this real quick. Look at these beautiful trades. Here we had this beautiful trade in Day Trader 5.0 last week. Actually got caught on the wrong side of the market. Tried to hold on for as long as it could, but just for the pop there, but just rolled over and stopped us out. So those canceled each other. But look at these beautiful trades. I mean, that is a trader's dream. Holding for the whole of the move on Tuesday, catching the whole of the move right back to the downside on Wednesday. Definitely, and like I said, a lot of our day traders haven't been trading today, but we're going to go ahead and switch over to see where we've been, actually. So we'll go there. So this was Tuesday. Black gains 11,197.50. Dual Day Trader ES was a leader of the pack, actually. That and the MAP DT up 1625 on a $5,000 account on Tuesday. The leader was actually the MAP DT again, as is always the case. The venerable and original MAP DT gained $6,155. Look at these two buy setups on the Dow. Buy on the Dow. Two different non-correlated systems, both held for almost most of the sessions move. Look at these beautiful trades in the Evo. Gets out for a quick scalp, and then the Russell Day Trader 1.0, been around about 7 years, catches that whole move that we just showed you. So the MAP DT puts up $3,720 yesterday. There are some other trades, the Day Trader 5.0, which we just showed you, for a $1,590 gain. There's a $2,130. Here's the black yesterday, up $14,035 for a very impressive 14% move. $7,000 was the gain for the Dow. The disc pad last week returned an amazing 70% on the absolute minimum account. Actually recommended is 50K. Preferred is 100K. So a nice 20% move for a 100K account, 35% for a 50K account, and 70% was the case for a 25K account. There are the gains: 53.12.50 for, I guess that was Monday, 28.75, 56.25. Actually was testing large. The dispatch was testing larger size, so this 8,437.50 gain does not count for the actual disc pad, and up 37.50 on Friday. So very impressive was the week last week for the disc pad. But there's the last 2 days for the MAP DT and Dual Day Trader DS, gaining an astonishing 50% in just 2 days for the MAP DT and 38.85% for the venerable Dual Day Trader DS, one of our star portfolios, for a $5,000 portfolio. Of course, you can trade any of these full automation with full automation if you'd like to get involved in any of these portfolios and participate in some of these gains. Look at the 55-day return, 100% nearly for the MAP DT, 82% for the Dual Day Trader DS on the 55-day. So if you'd like to get involved in any of these portfolios, you can just go to the website, click on, let's say you want the MAP DT, the version 3.0. We have up to I believe four versions of the MAP DT. Go ahead and just add that card. It's $2,000 for 3 months, for a quarter. But if you enter promo code VIDEO right now, you can save 25%, and you can get that into that portfolio for $1,500. These specials will not last. Go to the website, chat with the support team live if you have any questions, and we will see you next time.